Hi, I'm Anand Chakabaloo, and this is our Bitcoin Day on Motley Fool Live. As David Letterman would say, our next guest needs no introduction, so we'll summarize with just a few nouns and adjectives. Bitcoin billionaire, identical twin, Olympic rower, entrepreneur since his early teens, co-founder of Winklevoss Capital Management and Gemini, which you'll see on his background there. It's one of the leading platforms where you can buy or sell Bitcoin and other cryptocurrencies. So he's the perfect guest for us today. Thanks for spending some of your day today with us, Cameron.
Thanks for having me, and thanks for the flattering introduction. Really appreciate it.
So as the description Bitcoin billionaire would imply, you were pretty early on in identifying the possibilities. What was your wow moment with Bitcoin?
So my brother Tyler and I found Bitcoin in the summer of 2012. We were in Ibiza, of all places. We were actually on vacation, not looking for the next big thing. And somebody from Brooklyn recognized us from the social network and the Facebook saga and started talking to us. And he asked us if we had talked about Bitcoin or thought about Bitcoin or virtual currency before. And we hadn't at that time. And it sounded kind of crazy. And then after a shot of tequila, made a lot more sense. We got back stateside, started reading as much as we could about it. And I think what struck us was sort of twofold. One, this was the first money purpose-built for the internet that you could send around the world like email. That was amazing and groundbreaking to think about. And the second thing was, if you look at the properties of Bitcoin, they really mirror gold, and they equal or better the gold properties. So if you look at gold, gold is scarce. Bitcoin is truly fixed at 21 million Bitcoin. And those are divisible up to 100 million pieces. So you don't actually have to buy a full Bitcoin. That's one of the biggest education hurdles I think we see is people see Bitcoin at $50,000 and they say, I can never afford a Bitcoin. Well, you can actually go to Gemini and buy as little as $5 worth of Bitcoin. You don't have to, it's not like Berkshire Class A shares where you have to pony up, a couple $100,000. You can actually just buy small fractions. So it's even more divisible than gold, way more portable and easier to store in as much as it doesn't take up physical space. Storing it is obviously one of the hard problems that Gemini tries to solve for, and allowing customers to use Gemini to store their Bitcoin and other crypto. But really the digital gold framework and narrative struck us right away as this is a potential emergent store of value that has gold-like properties that works on the internet.
Right on. Now, definitely correct me if I'm wrong here, but one thing that strikes me about your worldview, and it's somewhat rare in the cryptocurrency space, is how you seem to focus on how cryptocurrency can work collaboratively with the traditional financial system. And it's and not or. Can you share some thoughts on that?
Yeah, absolutely. I think that Bitcoin and crypto forces the financial system to become better and up their game at a minimum, right? I think competition is always a good thing, or understanding there's new ways to do things. But Bitcoin is really not sort of gunning for the dollar. It hasn't proven to be a great medium of exchange currently. It's really a store of value. The first Bitcoin transaction involved two pizzas, and they were Papa John's pizzas, and I think they were sold in 2010 or something for 10,000 Bitcoin. They must have been really good slices of pizza, because today that value would be, I think, $500 million. And that's really a great example of why you don't want to spend your Bitcoin, just like you don't want to spend your gold. If you were holding gold in the 1970s, you'd be up something like 26, 27 times. If you held US dollars, you'd have lost something like 96, 97% of the purchasing power of those dollars. So dollars, via inflation, they lose value and purchasing power. And as a result, people want to spend them. And it's a much better currency than something like Bitcoin. There are things called stablecoins. Gemini actually issues one where you can get a token that represents a dollar and use that in decentralized finance and send it through the internet or whatever. But Bitcoin really hasn't proven to be a great currency at present, and it may never be, right? Just like gold has moved, is really not used as a currency today. It's sort of commodity money, and Bitcoin's much closer. It's much more near money than gold. But I think that if it's a store of value, that's perfectly fine. And at $1 trillion market cap, which it recently crossed, it still has about a 10x to go before it overtakes gold. And we think that Bitcoin's really first step is gunning for gold and vying for that store of value mantle.
Kind of related to that, kind of the optionality there, even in that base case, what does Bitcoin have to do to be truly mainstream? I mean, we've seen it take such strides. I mean, we're just a dozen years in or so, and obviously there were a lot of things. I remember, right, you got the Mt. Gox situation. Just I remember reading about just how early on, when you all were setting up your keys, you were going to different banks around the U.S. and almost like a covert operational thing. You've got the cold storage and things like that, but now there are lots of options. But as we think about, I think maybe in this last year, Bitcoin's really come into the public conversation more. What does it have to do or achieve to become truly mainstream, and how close are we?
Yeah, so I think part of it is education. When we first got into Bitcoin, the common prevailing view was that it was only used for sort of drug dealers and illicit activity and terrorist financing, all of which has been proven to be effectively false. And whatever kind of dark market activity that happens on Bitcoin pales in comparison to other major currencies, right? We obviously monitor for that. We take it very seriously. We have obligations, and we don't want bad actors in the system, but it is not a system of bad actors. But that was sort of the narrative. So education's important. There's also this concept that Bitcoin was totally anonymous in this Wild West, and it's actually not totally anonymous. So we work a lot on education, whether it's engaging with regulators to help them think through the problems, or just talking on Twitter. We're very vocal and active there and trying to sort of demystify a lot of these concepts. And then COVID-19 has actually sort of accelerated, I think, the adoption of cryptocurrencies and Bitcoin in a big way because of all the money printing, and people sort of are looking at what's going on and they're like, wait a second, where are these trillions of dollars coming from? Oh, they're actually just being printed. What does that mean to the other dollars that I'm holding? And like COVID has accelerated sort of the decline of a lot of brick and mortar, and the uptake of big tech in many ways, I think it also has brought sort of Bitcoin to the forefront faster. So there's always going to be these catalysts. In 2013, the Cyprus bail-in really brought a spotlight to Bitcoin, and people said, oh, wait a second. Okay, so if you could have deposits in a bank account in Cyprus, and the government can one day just come in and haircut everything above 100,000 euros, and it's just gone. It was called a bail-in, as opposed to a bailout in 2013. And that sent the Bitcoin price. That was sort of one of the big catalyst moments. It wasn't driven by people in Cyprus saying, oh, let's now go into Bitcoin. It was really everybody around the world seeing what was happening in Cyprus and saying, oh, wait, maybe I should just get some disaster insurance over here and check out Bitcoin. And I think it's, a lot of people view it as sort of a break glass, a way to future proof against inflation or fiat regimes just acting poorly. And we've seen a lot of mismanagement over the past couple of decades. And so I think it's frightening. And I think it's a good way to sort of protect yourself.
Great. Let's talk about the competitive landscape in finance, of which you're a part of. We've got traditional banks, we've got newer fintech players like Square and PayPal. We've got Robinhood, SoFi, Affirm, even crypto-focused players like Coinbase and Gemini. Even traditional retailers like Walmart are getting into banking. It seems like everyone's kind of landing and expanding into each other's spaces a bit. How do you think this whole ecosystem will evolve over time, and how does it look?
Yeah, it's a really interesting question. banking feels to me like it's sort of tied to the old economy in many ways. And a lot of these institutions have been around for, 100 plus years and there's been a ton of sort of consolidation. And I don't think that, bankers are not technologists. And that's one of the struggles I think a lot of people come across. I mean, wires get lost and a lot of these systems are done and they're just not really modernized. And I think fintech is the expression of banking in the new economy and trying to really bring a tech game to the space. And I think that's why fintech is exploding in a major way, because there's truly a need. There's just a gap that's not being met by a lot of the banks out there. And then if you look at like globally, you sort of zoom out, there's 1 billion plus unbanked individuals out there. And if the banking system, the current system could get there, they would be there, right? They want more customers. And they aren't, and they can't really address these folks. And I think something like Bitcoin actually has the potential to do that at social scale. All you really need is an internet connection. And there's like more smart devices than people on the planet right now. And with that address, you can send and receive and transact and hold Bitcoin. You cannot hold gold. And that's where I think gold sort of does not make the leap into streaming. It just can't do that. And that's why long term, I'm not really bullish on gold. I think near term, it's probably fine and it will do okay. It won't be the fastest to outrun inflation, but it's not, I wouldn't say it's a bad bet. It's just not the best bet, in my opinion. It doesn't make that leap. So I think crypto has the potential to address the underbanked and the unbanked in ways that the existing system simply cannot do. And that really excites us, the sort of the ability to empower individuals through access to basic financial services. I think longer term, that's what's really exciting about the vision. We're not sort of building inside the limitations of the existing system. We're trying to build this alternative avenue to get people really into the system.
So kind of keeping your future hat on, which probably this whole interview, probably keeping the future hat on, but
sure.
Well, what's something in the blockchain / crypto universe most people today can't envision at all, but will take for granted 5 years from now?
I think one of the most interesting developments has been decentralized finance. And that's really had a boon in the past, over the past year, where people are building projects that are permissionless, where you can lend and borrow funds, you can trade, and it's all, you can just show up to these smart contracts and send your collateral in and transact. You don't actually need permission to do that. And so it's really re-architecting big pieces of the financial system in a decentralized, permissionless manner, which is super exciting. And it's all being built on Ethereum. And I think the next question a lot of people would have would be like, well, how do I invest in this, this wave? And the simplest answer is that you could invest in projects directly, but then you have to sort of pick winners, so to speak. But if you think of Ethereum is basically this decentralized computer, and Ethereum is sort of like Manhattan, and buying Ether is like buying a parcel of land. And these projects are like skyscrapers. And by owning the land, as people build on top of it, build these skyscrapers, that brings value to you as a property holder. So really the way to index DeFi, which I think is one of the most important frontiers being built in crypto today, you can simply buy Ethereum, and then you have sort of a pro rata share of this piece of land that all this good stuff's being built on top of it. And a lot of that value accrues to Ether holders because these projects require you to use Ether to use them. And so they're Ether eaters, and they create demand. So what we've been kind of telling folks, and again, this is not financial advice. Just want to say that. But a lot of folks approach us and they say, hey, how should I enter crypto? And our view that is sort of Bitcoin's the entry point. It's the store of value. It's the oldest. It's the most liquid. It has the largest market cap. We've been in it personally for almost 9 years now. Bitcoin's really the starting point, but Ethereum is sort of a place where it makes a lot of sense to have chips on the board, and whether that's a 70-30 breakdown between Bitcoin or Ethereum, or 60-40, 50-50, that's a personal decision. But I think, that's sort of what we've been discussing with folks who ask us, how do I approach this space? Because Ethereum indexes so much of this amazing activity that's going on. And then Bitcoin is obviously Bitcoin. It's that digital gold. And I think if you look at sort of the performance, Bitcoin's done incredibly well, and Ethereum's done well too. And I think individuals are sort of well served to look at both of those projects.
That's a great avenue. I've got a bunch of questions around that topic. We'll kind of hit them. With Ethereum, those are helpful percentages. That's probably a lot higher than even those of us who were kind of familiar with Ethereum and investing in it would have, the 30 to 50%, versus Bitcoin 50 to 70%. How do you look at that? This might be getting a little far afield, but most of the people who are watching this are primarily stock market investors. And I'm going to say that most of the people haven't invested in cryptocurrency at all. So what percentage of a portfolio seems reasonable to you to split between stocks versus crypto?
Yeah, that's a really interesting question. I think, look, Tyler and I, we joke, we don't have our skin in the game. We have our bodies in the game. We are long Bitcoin, Ethereum, a couple other projects, and we obviously founded Gemini. We're the sole investors in Gemini. We're sort of all in, and heavily weighted crypto. But I think maybe a starting point for investors would to sort of look to see if you do have a gold allocation. What is that? Is that between 1% and 5% of your portfolio? And then ask yourself, this new form of gold, like, should you have some exposure? And whether that's, taking all of your gold exposure and putting to Bitcoin, or some fraction of it. But I think that Tyler and I wrote a thought piece on why we think Bitcoin is worth $500,000 a coin. In August, the Bitcoin was trading around 13,000 a coin. And we used the gold framework to back into that price per Bitcoin. And at $50,000 Bitcoin, yes, it's appreciated 5 times, but we believe there's another 10x in it within the decade, potentially more, because Bitcoin can really reach more people than gold because of its properties. And so I think that I can't think of another investment that offers the kind of asymmetric return over the next decade. And so, if that's 1% of your portfolio, that becomes 10%. That's a pretty awesome return. With a worst case scenario, you've lost sort of 1%, but you've got that 10% or 10x upside. So it's also, I think that Bitcoin is not just like an asset; it's really like a movement. It sort of kicked everything off, the decentralization of the world, and I think that it really should be viewed under the lens of a invention or innovation that is as powerful as the internet. And the problem with the internet is it's hard. You have to pick companies. You can't really index the entire internet. I guess you could buy a basket of stocks, but early on, if you could actually buy property on the internet, that would be like the best way to do it. With Bitcoin, you can buy property of the network, and with Ethereum, you can buy property of the network. So these are movements, and when you sort of talk to millennials and Gen Z, and I think millennials will become a huge percentage of the workforce within the next decade, you don't have to explain to them why they want software instead of hardware and physical gold. it sort of, it's understood. You don't have to convince them. They're already in crypto. They already live online. They see and they understand fluently where it's going. So it's sort of a bet also that all these individuals that are coming into the workforce and starting to earn value, where are they going to store it? And they're not going to store it in the IBMs or the blue chip equities, I think, as much. I think they're going to put into crypto. And so it's really a index on the future. I think that's the right way to look at it. And so how much do you want to allocate to the future? We've seen what FANG has done in the past decade. People would have thought, and you could have said, in 2014, you're late to Amazon. It's like, I don't know, 5x from 2014. And I don't think it's slowing down. And because these companies are sort of building into the future, and they've got incredible network effects, and Bitcoin and Ethereum are networks. The more people that sort of adopt and enter these networks, the more value. They follow Metcalfe's law, which is N squared. The more nodes or participants. It's like buying a cell phone. Every new person, if there's only one person with a cell phone on the planet, it's not very useful technology. If you buy a cell phone, all of a sudden, without knowing it, you've made mine have more utility and more value. And so you can't take the company model or discounted cash flow when looking at Bitcoin or Ethereum. You have to look at them as really networks of money and value, and they're incredibly powerful, and they have incredible growth potential. So that's sort of the lens. I would not take the DCF company model that Warren Buffett uses, and that's why he doesn't really get Bitcoin, because he's not paid to see the future. He's paid to find things that are cheap. And I don't think he ever will get Bitcoin, and that's okay.
Yeah, I think his billions are safe.
Yeah, he's got enough of them, right? He doesn't have to figure it out,
And you touched on with Ethereum, just it's kind of as a picks and shovels play of DeFi, decentralized finance. Do you also buy that for NFTs, since it underlays a lot of the non-fungible tokens? For those unfamiliar, that's like the $69 million Beeple JPEG that sold, or the NBA Top Shots or CryptoKitties. Do you see that as a bull case for Ethereum as well, or?
Absolutely, yeah, because these NFTs are minted on ERC20, or actually they're non-fungible, so they're probably ERC 71 or some other iteration. But effectively, those are Ethereum smart contracts, and that minting process requires Ether to do, and these NFTs are sent on the Ethereum network, which charges fees in Ether. So you are also indexing, to an extent, that incredible boom of online art and collectibles. And the larger that grows, the more Ethereum it's going to use, and the more it's going to be built. And there's all kinds of sort of cool things built around that ecosystem that we can't even predict that a year or two from now will be built on Ethereum because of the NFT movement. So that's a great point that you bring up. It's another reason. And this is a new frontier that really came about in a big way in the past year. And there are others out there that we're not even, discussing or thinking about. Could be around like rights management or title insurance, or really cool insurance contracts around parametric insurance, and all kinds of things that you can build on Ethereum. And that's all going to add value to holders of Ether.
And it sounds like, I don't want to put words in your mouth, but you talk about, but I think it's a really good framework for folks, because the more you dive into stocks or cryptocurrency or music even, the more it becomes fun to just do really, really obscure things when you should just be buying the Beatles. So you got Bitcoin and Ethereum. There are thousands of cryptocurrencies. There are these NFTs where it's unclear which platforms will win, much less which things within that platform or type of NFT will win. Is that kind of your worldview on that, hey, the meat and potatoes are Bitcoin and Ethereum? There might be some, but that's only for an average regular investor, 1% to 5% of your portfolio. These other things, even less so.
Yeah. So I agree with that general assessment that they are the meat and potatoes of a portfolio, of a crypto portfolio. I sort of joke that Bitcoin's the gateway drug. It's really the starting point. It's the easiest to understand because it's the simplest. It's digital gold. It uses that framework. And if you know about gold or spent time, or you don't even really have to know a ton about gold. It's just really easy to analogize. It's the starting point. But Ethereum has, it's sort of this space, this creative space that's unbounded in terms of the possibilities. It's this operating system where you can really build anything. And so it's really hard to analogize that to, the potential in the sense that, you can use digital gold for Bitcoin and that gets you to 10 trillion. And then to push beyond that, you have to think about how it gets there. With Ethereum, really, it's hard to put a bound on creativity and people building on this really, really cool system. So I think those are the two obvious starting points, and you index so much of the activity that's going on. Now, Tyler and I, we love marketplaces. So we own Nifty Gateway. Gemini owns Nifty Gateway, which is one of, the largest NFT marketplace out there. And so we sort of love the marketplace and being the provider of that for artists and people to buy NFTs, but not everybody can, a lot of these marketplaces are private. And it's harder or you could buy NFTs, but then you are sort of having to pick an artist and index on the next Beeple or the next sort of digital Warhol. And a lot of people are doing that and really enjoying trying to, collect art and stuff. And I think that's awesome if you want to do that. But, buying Ethereum is also a really straightforward way to index a lot of this stuff.
Great stuff. I think we've only got a few minutes left, so I'll have one weighty question, and then we'll end with a fun one. So the environmental impact of Bitcoin, a lot's been written recently about that, where the system is set up where it takes more and more energy as we go along. But there are also lots of potential ways to solve it, or alternatives, or I guess you usually see the big picture really well. How are you looking at this down the line? How are we going to kind of grapple with this, especially if Bitcoin stays very, very relevant? How are we going to grapple with the environmental impacts?
Yeah, thanks for the question. So one thing to note is these are open source software projects, so they're upgradable. So they will evolve, and they do evolve. And so Ethereum is actually moving to proof of stake. So won't use proof of work mining going forward within, I think, a year or so. And that may be more energy efficient, the mining process, and consume a smaller footprint. So there are ways to sort of change or upgrade mining algorithms to potentially have less of a footprint. Whether Bitcoin does that, it's probably unlikely. I think Bitcoin's going to be on proof of work from here on out. It's the most conservative. There's so much value tied up in the network that changes are done very slowly and take a long time. And many of the changes will never be made because the goal is to lock it down and keep it censorship resistant and reduce the attack vectors. So Bitcoin's not experimenting. It's not going to be the place where you experiment with new fangled, algorithms, I think. Whereas if the Ether is taking a different tack. All of that being said, these conversations around the green aspects of Bitcoin or lack thereof, I think fail to really have it in a larger, more informed context. If we're going to talk about the energy consumption of Bitcoin, we should look at the energy consumption of the internet. We should look at that of the footprint of smartphones. And we should really look at the financial system. What is the actual energy consumption of the financial system? And a lot of the processes, quite frankly, that have not been automated all the skyscrapers that support, tens of thousands of individuals and stuff. And I would reckon that cost of that system is enormous. We're not having that conversation. We're zeroing in and narrowing in on Bitcoin and totally negating the fact that Bitcoin is this incredible breakthrough that is going to unlock all kinds of efficiencies and savings and productivity around the globe. And so we have to look at sort of both sides of the equation. And what efficiencies will it bring to the financial system long term? And what prosperity will it bring if it can bring 1 billion people online into the financial system going forward? And so I think it's great to have these conversations, but I'm not seeing the actually informed, nuanced, larger context conversation. And sometimes, I don't think there's a conversation questioning the green impact of the iPhone and smartphones. They clearly consume energy. They didn't exist 25 years ago, right? And the amount of consumption on that. So I think it's good conversation to have. But let's do it in this context and understand, what is the net? And I think the net overall for humanity, prosperity, is enormous. And I think it's going to bring incredible efficiencies and or allow us to do things that are fundamental to human, financial inclusion, privacy, and human rights. And so that's the conversation I would like to have. And I think we'll get there. But right now it doesn't, we're not there.
Great. And now let's take it down 12 notches into more fun. We'll end on this. So let's say, you've been involved in many aspects of the American economy. So let's say the most interesting subculture, the world of cryptocurrency, Wall Street, or Silicon Valley.
Crypto is definitely one of the most interesting, and because it's there's a lot of memes in crypto. So when we first were meeting Bitcoiners in 2012, the electricity and the characters we were bumping into, it was definitely the Wild West. And some people did really, really well, and some people went to jail. There is sort of a binary outcome. But there's a number of us who are still building in the space today who have been sort of OG and been there for the past decade. And it's a really interesting group, and I kind of love the community. Sometimes there's a lot of disagreement and heated debate, but it's really I love it. In the NFT space, when we started, walking in there about 2 years ago, I felt a similar energy and electricity. And you also find this with the Ethereum community. They're super vibrant and exciting places to be. Silicon Valley, the first principles, a lot of the thinking and the audacity to think big and fail big and just take big risk, I think is amazing, and has been really powered the growth story for many years. And that's been amazing. I think that is breaking up a little bit in the sense that crypto is really a decentralized global phenomenon. You don't have to be in Silicon Valley to be building crypto. I think that's healthy. And so there isn't as much of a Silicon Valley for crypto. It's really, we're seeing kids in Scandinavia building $1 billion projects on DeFi, and they just graduated college. It's there is no sort of centralized hub. I think New York is one of them in the sense that we're there and a lot of companies are building in New York, but it's really a decentralized phenomenon, which is super exciting. And I think when you start to meet people in the space and look at the projects, to my earlier point, as an investor, that's the kind of electricity you really want to get behind. I personally I think there's some really interesting stocks and companies out there, but I'm more into building and getting behind massive movements like the internet, like Bitcoin, And so I think you'll be happy if you sort of head in that direction. Yeah.
Right on. Now, thank you, Cameron. You've shared some wonderful thoughts that I think have given a lot of our viewers just some really good insights into the space. We hope to have you again soon. Thank you.
Awesome. Thanks for having me. Thanks so much. And if anybody's interested in crypto, Gemini.com, that's where you can check it out. Thanks so much.